You just got a raise or switched jobs and your paycheck looks great until tax time hits and then you're blindsided. If you ever felt like you're paying way more than expected, here's why. And there's a fix that almost no one is using. After wrapping up this busy season with my clients, I noticed a pattern. A lot of my clients made the same big mistake. Some got new jobs, some had big raises, some didn't even know what they were filling out, but the result was the same. They did not withhold enough taxes during the year. Yes, there are ways to minimize your tax owed, but if you're withholding way lower than your effective tax rate, there's only one thing that's going to happen in April. You're going to have a big bill. One client of mine owed more than $33,000. Stick around until the end and I'll show you a simple fix that could have saved them thousands of dollars. So how do we fix this problem? Your W-4 is the form that lets your employer know how much tax to withhold from your paycheck throughout the year. Most people fill it out when they're first hired and then never look at it again. But if you get a raise, change jobs, or if your household income increases, like your spouse returns to work, then you really need to look at your W-4 again. If not, you might be under withholding and you will be very surprised when it comes tax time. So how can you see if you're withholding enough? Step 1, check your effective tax rate. Go to your most recent tax return and take your total tax on your 1040 and divide it by your adjusted gross income. That is your effective tax rate. It's the average of all of your tax rates. For example, if your tax was $34,000 and you had $200,000 of adjusted gross income, your effective tax rate is 17%. Now let's see what you're currently withholding on your paycheck. Grab your latest pay stub and check your federal withholding amount. Take that and divide by the gross wages that are on that paycheck. For example, if you had $1,500 withheld on your monthly paycheck of $10,000, then the amount that you're withholding is 15%. Now compare the two rates. If your withholding rate is lower than your effective tax rate, you might owe in April. And if it's significantly higher, you might be withholding way too much and be getting a very big refund. You might want to adjust your W-4 then as well so you can get more of that cash flow throughout the year. A lot of this has to do with a major change that happened with the W-4 and withholding in 2020. Back in 2020, the IRS updated their W-4 and it completely changed how the form works. The old W-4 form used allowances. The more allowances you had, the less withholding you had. The payroll systems had built-in logic to account for these and account for the different tax brackets. Setting it up this way was very predictable and most people could pretty much determine if they were going to get a refund or be very close. But now with the new W-4 form starting in 2020 and after, there's no more allowances. Steps 1 through 5 ask you for your filing status, deductions, credits that you might have, and additional income. The last item is your extra withholding. Most people leave all of those blank thinking that their employer will figure it out for them. But here's why now high-income earners are under withholding. Number 1, there's no allowance buffer. Previously, a lot of people would just often check 0 and say there was no allowances just to be safe and there was no problem. But that no longer exists. Number 2, when you're married, they're considering your income as dual income, which is misleading. The new form doesn't automatically adjust for 2 high incomes. Employers calculate based on what you tell them, not any other factors, and if both spouses earn well, you are definitely under withholding. Number 3, most people don't fill out steps 2 through 4. And honestly, that's really understandable because it looks really complicated. Some people don't want to also share that information with HR, and they assume their payroll is taking care of it. But payroll is only looking at the W-4. They're not allowed to do anything else. So let's say there's a significant difference. How do you update your W-4? The IRS provides a calculator where you can plug all your information in, but honestly, it takes time. It's not always accurate, and a lot of people don't know this information anyway. You can muddle through it, or you can do an easy step that I like to do with my clients. Let's walk through the W-4 and I'll show you how to fill this out in a simple way. Step 1, calculate the difference. Remember our example where our effective rate was 17%, but only 15% was being withheld from your paycheck? That 2% difference is what caused the tax bill at the end of the year. So now let's walk through how to calculate the exact dollar amount to fix that. Take your gross pay for the period. Let's say you earn $10,000 per paycheck. At 17%, the total tax you should be paying is $1,700, but you're only withholding 15%, which is $1,500. So you're short by $200 per paycheck. Then step number 2, update your W-4. So when you look at your W-4, you have your basic information at the top here, and then it goes to step 2, 3, and 4. Scroll to step 4C. This section is for extra withholding per paycheck. Enter the $200 you calculated. Submit the form to your HR or payroll department, and you're all set. One of my clients got a big promotion last year, bigger paycheck, big bonus, super exciting, but they didn't even think about taxes. They figured I've always been fine before, nothing has changed. What they didn't realize is that their income bump pushed them into the next tax bracket. And on top of that, they had a very large capital gain paying that year. Come tax season, they owed more than $33,000 to the federal government. No planning, no adjustments, no clue it was coming. I don't want that to be you. If they would have just taken a look at their withholding, compared it to their effective tax rate, they would have been able to mitigate that tax bill that they had to pay. So go take a few minutes, check your numbers. If your income has changed significantly, so should your W-4. Let's avoid tax season surprises and make sure you keep more of your money where it belongs. In my next video, I'm going to share the good and bad of business deductions and what the IRS actually says you can write off so you don't get into trouble.